Good evening, ladies and gentlemen, and welcome to the earnings conference call for Q2 FY26 for PTC India Limited. PTC India was incorporated in 1999 to undertake trading of power to achieve economic efficiency and security of supply and to develop a vibrant power market in the country. PTC is a pioneer in starting a power market in India and undertakes trading activities that includes long-term trading of power generated from large power projects as well as short-term trading arising as a result of supply and demand mismatches. In addition to the trading business, PTC has incubated techno-commercial consulting business to develop power market for the CNI consumers, SEZs, port trusts, etc. Let us now begin with the introduction of the management team. We have with us today Dr. Manoj Kumar Jawar, Chairman and Managing Director, Mr. Rajiv Malhotra, Executive Director and Chief Risk Officer, Mr. Pankaj Goel, Executive Director and CFO, Mr. Bikram Singh, Executive Director, Marketing, Mr. H.L. Chaudhary, EVP, Commercial and Operations, Mr. Rajiv Maheshwari, Company Secretary and Compliance Officer, Shri Mukesh Ahuja, VP Finance, and Shri Anand Kumar, VP Investor Relations. At this moment, all participants are in the listen only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. I would now like I would now like to request Dr. Manoj Kumar Jawar, Chairman and Managing Director, to give his opening remarks. Thank you and over to you, sir.
Thank you. Good evening, everyone. I extend warm welcome to all of you to our post-earning call following the announcement of our Q2 financial year 25-26 results. I am joined today by core members of our management team, as already introduced by the moderator. This call gives us an opportunity to share key insights into our company's performance and the long-term vision. We deeply value this engagement with our esteemed stakeholders, our investors, our partners, shareholders, and their representatives who play a pivotal role in our continued growth and success. During the first half of the new financial year 25-26, with the national demand of energy grew by only 1.07%, our trading volume has grown by more than 11% to 49.22 billion units. This was achieved while maintaining a trading margin of 3.54 paisa per unit. Notably, 50% of the traded volume came from exchange traded products, with the remainder coming from bilateral long-term and medium-term trades. Improved margin realization has also contributed to a 10% increase in the trading income. Just to recall, in the last quarter, we had informed about evaluating renewable energy long-term PPAs. So I am happy to inform that in this quarter, we have executed PPA of 100 megawatt and plant is expected to get operational by first quarter of financial year 27. We have floated an expression of interest for further 500 megawatt of solar plus coupled with 250 megawatt oblique 1000 megawatt hour energy storage system. The response from prospective bidders has been encouraging and our teams are evaluating these products. Our product and service offerings are helping in retaining client in the C&I segment and also in other business opportunities. We are bid consultant for renewable energy capacity development of around 1000 megawatt in solar and hybrid space. In the cross-border markets, our operations continue across all three grid-connected neighboring countries, which is Bhutan, Nepal, and Bangladesh. Energy flows to Bangladesh remain stable under the agreed contractual framework, and the regular flow of payment over the account is happening. Bhutan is also experiencing rising electricity demand, especially during the winter months when water availability declines. Similarly, in Nepal also, we have commenced both import as well as export of electricity based on their demand supply profiles. Looking ahead, we expect power demand to grow steadily at 6 to 8% annually, although short-term volatility may arise due to transient weather conditions. Regulatory bodies are also actively fostering market reforms, including discussions on virtual power plants and standardization of exchange products, amendment in power market regulations to ensure a level playing field among exchanges, traders, and OTC platforms, fractional access to the transmission systems, and some other developments. So, thank you once again for your continued trust and support. We appreciate your participation in today's call. Thank you.
Thank you, sir. I would now like to request Mr. Pankaj Goel, Executive Director and CFO, to discuss the quarter's financials with everyone. Thank you and over to you, sir.
Yeah, good evening to all. Thank you, CMD sir. Now I will go through the quarterly results, September 25 and half year results, September 25 on standalone basis. First, I will go through the quarter results. The volume has increased by 9% to 26.2 billion units from 24 billion units. Volume has increased in almost all segments of trade, that is long term, medium term, cross border, and exchange. Total operational income has increased by 11% to 137 crore from 123 crore. The operational income has increased mainly due to increase in cross-border trade and long-term trade. Profit before tax has increased by 15% to 180 crore from 157 crore. Profit after tax has increased by 15% to 134 crore from 117 crore. That is in line with the PBT. Total comprehensive income has increased by 15% to 134 crore from 116 crore. Earning per share for the quarter stood at rupees 4.52 as compared to rupees 3.94 during the last quarter. Now I'll go through the half year results. For half year, volume has increased by 11% to 49.2 billion units from 44.5 billion units. Total operational income has decreased by 1% to 248 crore from 251 crore. The operational income has decreased mainly due to decrease in net rebate income in the first quarter of FY26. Profit before tax has increased by 7% to 321 crore from 300 crore. Profit after tax has increased by 7% to 239 crore from 223 crore. Total comprehensive income has also increased by 7% to 239 crore from 223 crore. Earning per share for the half year stood at rupees 8.06 as compared to rupees 7.53 during the last half year. Now I'll go through the consolidated results for the quarter. Volume has increased by 8% to 26.2 billion units from 24.3 billion units. Profit before tax from continuing operation has increased by 36% to 298 crore from 219 crore. Profit after tax from continuing operation has increased by 36% to 222 crore from 163 crore. Consolidated PAT from continuing operation and discontinued operation has decreased by 5% to 222 crore from 234 crore. Total other comprehensive has also decreased by 5% to 222 crore from 233 crores. Earning per share for the quarter stood at rupees 6.46 as compared to rupees 7.34. Now I'll go through the half year consolidated results. Volume has increased by 10% to 49.2 billion units from 44.9 billion units. Profit before tax from continuing operation has increased by 39% to 587 crore from 422 crore. Profit after tax from continuing operation has increased by 48% to 465 crore from 314 crore. Consolidated PAT from continuing and discontinued operation has increased by 10% to 465 crore from 423 crore. Total other comprehensive income has increased by 10% to 465 crore from 423 crore. Since the PAT after minority interest has decreased to 386 crore from 391 crore, EPS has also decreased to rupees 13.05 from 13.21 on a consolidated basis for the half year ended. Thank you.
Should we begin with the question and answer session, sir?
Sure.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, please click on the QA tab on the panel and click on Raise Hand button. The operator will announce your name when it is your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from Vishal Mehta from Oaklane Capital. Please go ahead.
Hello, sir. Am I audible?
Yeah,
Yes,
sure.
please go ahead.
Sir, I have three questions. The first question was regarding our subsidiary HPX. If you could just throw some light on is almost in 1 month we'll have the market coupling which will become active. How prepared do you think is HPX in terms of its software, the operations, and what kind of investments, if at all, we need incrementally to get on par with the largest exchange? And what is our internal estimate in terms of market share gains and volumes maybe in the next 1 to 3 years coming from that exchange? So that is the first question. Should I go ahead with the questions and then maybe you can answer all
Yeah,
together?
sure.
The second question is, sir, we have close to 3,000 crores of cash on our balance sheet. Just wanted to understand the perspective of how you internally are looking at utilizing this. I mean, if there is any mix in which, how much will go in supporting the existing business in terms of working capital, how much will go to the new ventures like the JV we planned, or how much of that do we intend to pay out to the shareholders? If you could just highlight that, that would be great. And the final question is, so we've just recently announced the JV. Now that is also in the renewable space, and we just sold our assets in PEL, which were also in similar business. So how is this venture different, and what is our expectation from this in terms of scale? What is the roadmap? And if you could just highlight what will be the investment requirements for this, it'll be great. Those are my questions, sir. Thank you.
All right. Thank you. So your first question related to HPX, and with the onset of market coupling, you wanted to know the preparedness of the exchange. So what I can say with certainty is that this exchange is basically operating with a very, very modern technological platform, and we are having Bombay Stock Exchange as the tech support provider, and the exchange also has got a very, very competent IT team. So I absolutely see no reason as to there should be any issue regarding tech support or technology not able to deliver what is required. I see absolutely no reason over there. In my considered professional opinion, the exchange is functioning very well and functioning with a very latest state of the art technology. So that answers your questions regarding the preparedness of the exchange. Regarding the market share, I mean, i- it is something which will evolve over a period of time, but we are expecting and we hope that because of its service offerings and its ability to connect with clients, this HPX also gains significant market shares. So time will tell, but we are hopeful. So that is regarding the HPX. Regarding 3,000 crore rupees cash utilization, you have asked me. So out of that, you will see that around 1,000 crore rupees, so we have to keep as working capital deployed in the main trading business of the PTC, and that is a seasonality. Sometimes with some clients, the outstanding position may increase, sometimes it may decrease, and this is a very, very high volume business. So basically, you need to be ready with adequate cash flows to maintain your trading operations. Regarding 1,000 to 1,500 to 2,000 crore rupees, we definitely need to, I mean, invest into some business ventures wherein we are able to ensure visibility of the revenue for coming decade or so. So one, and that relates to your third question regarding the JV. So one such venture which we have envisaged is investing in the renewable energy assets in collaboration with NLC Renewable Energy Limited. So your question, the third question and the second question, if I were to answer in a joint manner, first query of you is that why we sold the PL assets if we were to invest again into the renewable energy asset. So my answer would be that in the PL we were the sole owners, and frankly speaking, we are not a very large asset operating company. We got a very good price. All our cash flow models predicted what we were to derive from that venture, and the deal at which it happened with the ONGC, it was a very, very profitable deal. So we went for that. That is one thing. But in this particular venture, we will not be actually required to deploy a large team to operate these assets, because basically this is a venture with the NLC. Now, NLC is a very, very large and very established player already in the field of not only renewable energy but conventional energy. So they have got wherewithals and the operating team and the knowledge, know-how, and all other things. So basically, our role and responsibility would be related to facilitating the trading and finding the consumers, which I think is our forte. But to be able to get those trading rights and to get into that space, we need to collaborate with them. So this is a win-win kind of situation wherein multiple kind lines of products are can be thought over a period of time. We will start with the plain vanilla distribution company bids wherein someone is bidding, and if we think that it is making sense for us to quote prices, and if we come L1 in those tenders, then some capital definitely would be put up. But at a later stage, merchant capacity may also come, consumer centric capacities may also come. So this is a good beginning. Now, regarding deployment of capital in this particular venture, initially we are thinking about investing 500 crore rupees or so. Since we will be a minority partner, the almost three times of this amount would come from NLC. So that would make a decent corpus of around 2000 crore rupees. And on that, we can further leverage that amount to invest into some big size projects. Initially, we are thinking like this. Time will tell how this venture is going further, but we are very hopeful. And this address partly your question regarding capital deployment also. So I hope I answered your questions.
Uh, Great, sir. So just one thing in that, you said 1,000 crores will be used for the working capital, 1,500 crores for that. So balance, you would be able to pay out, or is that the intention?
No, I think this JV is 500 crore rupees we are thinking. Then there are other opportunities also which we are exploring. Uh,
Okay.
we definitely, the energy sector is a happening sector. This is a growing sector, and then this great energy transition is happening before our eyes. So it would be not very wise to, I mean, distribute the dividend. Rather, we would like to put in some productive assets to ensure long-term revenue assurance for the company for the coming decade or so.
Great, sir. Thank you so much for your detailed answers. I'll join back in the
Thank you. We'll take one text question from Ragini Pandey from Elara Capital. The question is, what is the short term and long and medium term volume in Q2 FY26? Second
I
question
would,
is, what? Yeah, go ahead, sir.
yeah, I would request Pankaj to answer to
Yeah.
that.
So the long term, we take consolidated long term, medium term, and cross border together as a long term. So the long term volume is around 12.2 BU, and short term volume, including exchanges, 13.8 billion units. So that is to say, 53% of the total volume is from the short term, and 47% of the total volume is from the long term and medium term contracts in the quarter.
Okay. Yeah. The second question is, what was the trading margin in short term and long and medium term? And what was the overall trading margin?
Yeah. So in short-term trade, the total including exchange is around 0.85 paisa in the quarter, and in the long-term trade, it is around 7.02 paisa.
And the last question from her is, what was the revenue from HPX in Q2 FY26?
Yeah. In FY26,
20,
20
this
half,
half yearly you are asking, 26 is not yet complete. Q2.
so yeah, in Q2 September, this thing 25, the profit before tax for HPX is around 1.26 crore, and after tax it is 47 lakhs.
Thank you. We'll take our next live question from Channamallu Halagori, an individual investor. Please go ahead. Channamallu, your line is unmuted. Kindly unmute your microphone and go ahead with your question. Since there is no response, we'll move on to the next question from Suyash Bhave from Wealth Guardian. Suyash, please go ahead with your question.
So yeah, I had a few questions. First is in H1, we have done almost 50,000 volume, So, are you on track to cross 1 lakh volume for this FY? And what would be the volume guidance for the next 2 years as well? So that's my first question. Second is our I can see that our long-term mix has improved well as against past few quarters. So in our investor presentation as well, we talked about two long-term PPAs. One is the 100 megawatt solar power agreement, and the other is the 500 megawatt solar power agreement with the additional storage costs. So is it that we are now having a broader strategy in place to keep increasing the long-term mix? So what would be your guidance on the mix going forward? And finally, sir, we own 22% in HPX. Is there any such regulation or restriction that for any shareholder of HPX, so no other player can have more than a 20% stake in us? For example, one of our existing promoters acquiring more than 20% taken together and increasing their stake in us and PTC beyond 20. Is there any such regulation which stops them because we own 22% in HPX? So these are my three questions. Thank you.
Allow me to answer your third question. Or first and second question, I will refer the matter to the Director Marketing and the CFO. Regarding your third question, which pertains to the equity holding in the HPX, there is a restriction from the regulator that anyone who is holding more than 5% equity in that exchange cannot become a trader member. So that restricts our own trading on the HPX platform. So that is the regulation. One cannot have more than 5% if he wants to trade on that exchange. So that is the third question. Regarding first question, which pertain to your guidance on the long-term volumes and overall volumes, Vikram, would you like to inform?
Hi, yes. With regard to our volumes, actually, it is difficult to say where we will close the year. We are definitely looking at crossing last year, but let us see how it pans out. I don't think we'll reach 100. That number looks a little too ambitious right now. And with regard to our focus on long term, definitely, our focus has been on long term, and these PPAs we are looking at signing, and the volume, of course, will come in the next 2-3 years as and when the plants get commissioned. The current volume increase is from the current long-term agreements only, based on some weather patterns and scheduling by the utilities. There is an increase under the current arrangement only.
So
Thank you.
I would like to clarify this one thing. As you have said that in the half year, we have done around 50 billion units. So for the year, it will be 100 billion units. But as you are aware that ours is a seasonal this thing. And in every time, if you'll go into the history, first half is because of the summers and all that, the volume is high. But in the second half, because of the winter season and all that, our volume is low. So it is not just the double, but as our ED marketing is explained, that naturally we are looking for crossing the last year's volume in line with the same.
We are confident and hopeful that we will cross at least the last year's volumes.
Suyesh, does that answer your question?
Yes, yes, they do.
Thank you. Ladies and gentlemen, to ask a question, please click on the Q&A tab on the panel and click on raise hand button. We'll take our text questions. The next text question is from Ravindra G, an individual investor. In PFS Concall, MD and CEO said they are having a plan to raise the fund of around 300 to 500 crore through issuing preferential shares. And here you said the process of divestment of PTC India Financial Services is under active consideration of board. Which one is correct? Why all you are misleading all?
We are definitely not misleading, and if you see, the both are saying in essence same thing. If he's saying that they are going to raise the equity, and if we are saying that we are going to dilute our holding, both mean one and the same thing. That is one thing. But yes, the active action in this regard is subject to approval of the PTC board, and that matter is under the consideration of the board. That much I can tell you. We have engaged services of a reputed consultant in the field of this private equity, and equity restructuring, etc. So we are awaiting the report, and that report will be discussed in the board. This much I can divulge as of now.
Thank you. Before we take the next question, would like to remind participants to ask a question. Please click on the raise an icon tab available on your toolbar. You may also post your text questions. The next text question is from Rupesh Sanke from Elara. Dear sir, what is average expiry years of our long-term portfolio of 7,500 MV? How do you see bilateral market as exchange prices are very low? Also, exchanges have now long duration contract products available for participants.
So third thing is key exchanges are currently not having any long-term product. The maximum time period available for any exchange to operate is 3 months only. So beyond that, they cannot do any trading. And having the long-term contracts on the exchange platform is technically speaking a lot many challenges have to be overcome. Very importantly, in the long term context, there is always a question of having a very robust settlement mechanism, which is very difficult thing to ensure in long term context, because not only the energy prices but the fixed charges and the additional charges relating to change in law and so many other complications come into the play. So that is one thing, that currently the long-term markets and the short-term market or the exchange market are very different thing, and both are growing, no doubt. As of now, almost 85% power is being traded on the long-term contracts, so that is likely to continue. 15% or less than 15% is happening through the short-term markets. Within the short-term markets, the bilateral contracts are slowly and gradually moving towards exchange products. So that shift we are watching, and that is happening. And of course, we are part of both the markets, so it does not affect us. It is helping us in our business. Overall volume is growing in exchange as well as long term. So that was your third thing. But what else you asked?
I'll repeat, sir. How do you see bilateral market as exchange prices are very low? Also, exchanges have now long duration contract products available for
Okay, so
participants.
how do I see the bilateral contracts? I see one thing is very clear. If the prices on the exchange remain low, the volume of the trade on the exchanges or even in the bilateral markets increases significantly. So basically that helps us because there are more opportunity to trade. And long term, as I told you, long term will coexist, because for adequacy, mm, the long term market has to remain there, and that is very different market from the short term or exchanges.
Thank you. We'll take our live question from Vishal Mehta from Oakland Capital. Please go ahead.
Hi, sir. In context to BFS, just wanted to understand, we are planning to dilute our stake over the medium to long term. But there has been a development where three independent directors resigned simultaneously. So just wanted to get your perspective. How do you view that situation, and is there any concern that you see impacting the business? Thank you.
Oh, one thing is very clear. Actually, the tenure of those all independent directors was in any case coming to an end in November. So just barely a month before their completion of the tenure, they chose to resign. That was unfortunate and surprising for us. But yeah, business continues. When they had quit, we have already appointed one independent director who is very reputed name in the industry, in the financial services industry, which is Miss Mini Ipe, who has been uh, managing director in the LIC and chairman and managing director of LIC Housing Financial Services Limited. So she is a very reputed and respected name, and we are looking to fill up vacancies up to other IDs also. We'll soon do that. Regarding business, I don't think it has made an impact.
Great. Thank you.
Thank you. Next question is from Channamalu Halaguri, an individual investor. Please go ahead. Mr. Channamallu, we are unable to hear you. Please check if your microphone is on talk mode.
Am I audible, madam?
Yes, please go ahead.
Am I audible?
Yes, we
Okay,
can
madam.
hear you.
PTC India company management is working.
Sorry, sir, we are unable to hear you again. Mr. Channamallu?
Am I audible, madam, now?
Yes.
Yes, madam. My question is, madam, PTC India company management.
So we lost your audio again. Can you post a text question, please? We are unable to hear you.
Oh, am I audible, madam, now?
Yes.
Am I audible now, madam?
Yes, we can hear you, but we are
Am
losing
I
your
audible?
audio.
Yes, madam.
Yes. We can hear you now, but we are
Okay,
losing your
madam.
audio. Yeah.
So what's happening, madam, in PTC India Financial Services, what that divestment process is not taking any serious action and taking very lot of time and lagging behind. So what's happening, madam, here in PTC India Financial Services, some directors, independent directors are raising corporate governance issue that damaged the name and fame and credibility of the PTC India also. If you are not taking any serious action about the divestment of the PTC India for Financial Services, that will totally destroy the wealth of the investors who are invested in the PTC India also. So please take a serious action about the divestment of the PTC India Financial Service, madam.
Okay, I would request our director strategy, ED strategy, to respond to your queries. I appreciate your concern, but I also assure you that we are cognizant of the issues, and whatever is required to be done on the business front is being done. But let Rajiv give a detailed reply.
So, Mr. Khanagodi, what we would like to respond to that is one, of course, with the passage of time, there can be some impatience. So, no taking that away from you. But a lot of what you have said comes in the realm of conjecture. So, our response to that would be see, there is some things that happen in a boardroom, which only those board members are privy to. What were the reasons? I think the facts have been placed before you. So my request as from the management team would be to not get into the realm of what is essentially conjecture. Thank you.
Thank you. We'll take our next text question from Mangesh Kulkarni from Almond's Financial Services. What is timeline provided by PTC board for external consultant to complete the PFS disinvestment deal? Also, with available cash in books and expected better second half, what kind of dividend we expect in near future? I know the company in past has rewarded shareholders with good dividend payout.
Regarding dividend, we already have a dividend distribution policy, and we hope we will be following that policy. And there has been a consistency in our dividend payment performance. We hope to maintain that trajectory. That much I can say here and now. Of course, the matter regarding distribution of the dividend is always, I mean, determined first by the board and then later on, I mean, ratified by the shareholders. But we on the right track, and I see no reason to see any major deviation occurring. So that is that. Regarding cash utilization, I have already explained as to how we shall be going to put that cash into the business.
Thank you. Next text question is from Sandeep Balotia from VLS Finance Limited. What is the reason for substantial increase in cash and cash equivalents and trade payables for the quarter?
Basically, I mean, it was a better management of the outstanding positions against certain utilities. So we tried to, I mean, follow it up very, very seriously with the utilities who were kind of, I mean, having huge accumulation of arrears. So realization of those areas led to this temporary surge in the liquidity. Second thing, currently, I mean, earlier it used to happen that so many distribution companies were facing liquidity crisis. currently overall on a country basis, what we see is that the prices of the electricity in the uh, day-ahead markets have come down, and that has really helped the utilities improve their financials. And part of that is again reflected in their better payment, a timely payment, etc. So that has led to accumulation of some cash into our books.
Thank you. Before we take the next question, would like to remind participants to ask a question. Please click on the QA tab on the panel and click on the raise hand button. The next text question is from Dheeraj Kriplani from Avendus Spark. First question is, hi sir, can you please repeat what were long-term margins in 2Q FY26? And sir, what was the HPX revenue for 2Q FY26?
Yeah. So as far as the HPX revenue is concerned for the Q2, it's around 11.53 crores. And the margins for the long-term trade for the Q2 is 7.02 paisa.
And the second question is, sir, what are your views on virtual PPAs?
This is a evolving field, and we hope that it will help our business. Currently, as we see it, it is targeted mainly towards the retail customer segments. We hope that with a little bit tweak in the policies, if this product is allowed to the distribution companies also, that will really change the dynamics of the renewable energy markets in the country. We hope that people in the policy making circles are aware of those developments, and we are hoping that as the things evolve, it will grow, and it will be an important component of the power markets in future.
Thank you. Next text question is from RK. What is the status of Tista? When will it be operational?
Pankaj, would you like to inform?
Yeah, the Tista has sorted out some issues, dispute issues with Haryana, and they have got a good amount of some pending payments based on the judicial orders also. And their all restructuring plans has already been approved by PFC and REC. And as per the latest information available to us, the construction of the plant is going on, and they are planning to start part of the capacity in the during the next year.
Thank you. Next text question is from Channamalu Halagodi. What is the expected timeline for the divestment of PFS? Can you please give us any timeline exactly, and what is the reason behind delay in divestment?
You see, sir, currently, if you examine the books of the PFS, the book value would be around 40 rupees per share. The market trading price is lesser than that. We would not like really a situation in which, I mean, we are selling as if it is a fire sale. That is a very valuable business, and we intend to realize the value in it. So while right now, though, I cannot even say that we when we shall be starting that process, because that depends upon certain decisions from the board. So it is difficult to give a timeline for completion of that activity. That lies. I mean, we are aware of what is happening. We are aware that what actions would be prudent to be taken, and the board is seized of the matter. So kindly have some trust and faith in the board.
Thank you, sir. Next question is from Rupesh Sankhe from Ilara. Dear sir, what is receivables as on September 25? Also, any amount outstanding beyond 90 days?
As far as the outstanding is concerned, as on September 25, the total debtors is around 4,960 crores. But as we also say, there is a creditors deferred towards that around 4,145 crore, and our net working capital net working capital utilized as on September 25 is around 815 crore. And as regards the more than 6 months debtors, so more than 6 months debtors is on a gross basis it's around 1,200 crore. But if we take out, because back-to-back creditors, it's around 1,134 crore, and the total exposure on account of more than 6 months is 98 crore. And out of that, in 98 crore, we have made some provisions also. So I will say that major amount is stuck of around 35 crore is one of the dispute with one of the customer. So that our advocate said that it is a very good case. So practically we can say that there is no outstanding for more than 6 months.
Thank you. Ladies and gentlemen, to ask a question, please click on the raise hand button available on your toolbar. You may also post your text questions. Ladies and gentlemen, to ask a question, please click on the raise hand icon tab available on your toolbar, or you may also post your text questions. As there are no further questions, I would now like to hand the conference over to Dr. Manoj Kumar Jhawar, Chairman and Managing Director, for closing comments. Over to you, sir.
Allied shareholders, it was pleasure interacting with you. I hope we were able to answer you to your queries to your satisfaction. Uh, on my part and on part of my management team, we assure that we shall be working in a very, very professional manner, and we expect to maintain the great momentum which we have seen in the first half of this year, and we hope to close this year on good note. Thank you so much.
Thank you, sir. Ladies and gentlemen, on behalf of PTC India Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect. Thank you, sir.